Okay, 4th of February, Rudy here. Welcome to the Daily Market Show, where we go through indices and commodity prices at the moment, try and look for trends where we should be investing. If you're used to watching the Daily Ninja Show, that's gone undercover now, $10 a month, where I'll go through specific shares and ETFs to get involved with. So jump on board, cup of coffee a month. Alright, so our share market, the XKO. So we're having a bit of a retest. Are we going to form a bit of a head and shoulders up here? Let's see what happens. So that's the financial index, XFJ. So we're having a bit of bounce off support here. The materials sector, obviously one that I'm really bullish on at the moment, and we should be invested heavily. That's also this is the Bloomberg Commodity Index. So this is your whole basket of commodity prices, including livestock and whatnot. You can see there a lovely cup and handle there that we've now broken out of. So if we do some so if we look at so we look at the XMJ over the financials. So this is the materials over our financial sector. So again, we're still continuing the outperformance and probably going to do its next leg. If we compare it to the All Ordinaries, we can see again starting that next leg up with a target up here. So there's no use being in the index. Our gold miners index, so we found a bit of a bottom here, which is nice shooting star to target. Energy sector, this is where we've been loading up in the channel on energy stocks. Look at that lovely rounded bottom there, with a bit of resistance looking to break through. And what I'm watching closely is the the energy sector against the materials sector. Get the right country. So ASX. Okay, so this is our declining wedge. So usually a very bullish pattern when broken. So that's implying the energy sector to outperform the materials sector. And if we compare it to the, now this is an important one for divvy people, XCJ divided by XFJ. Okay, so here we've got the energy sector about to rip against the financial sector. And I'd say the dividends and the boys in the energy sector are double what's in the banks. And look at that performance to come. Anyway, our discretionary sector doesn't look healthy. The staples, Coles and Woolies, look stable. An interesting one that's playing out in America too is the so the discretionary over the staples. So down means staples outperforming the discretionary. So that's not ideal for a bullish market where people aren't spent well. So basically that's implying people still need to buy their food, which is natural, and people cutting back on discretionary stuff. Our tech sector continues to be walloped. There is still two that didn't get walloped that I like. BDHG, your super fund. So that's just steady as you go. Interesting one if we compare them to VDHG. So one of my pet projects is getting people out of default super funds in places like Oz Super and Host Plus. You can buy ASX 300 stocks. A number of subs have done it. You basically just need to get yourself a whole bunch of mining shares, and if you had done it in August, your super fund would your balance would be 30% higher. Still think that will continue. Alright, S&P 500. So pretty boring. Again, if we benchmark the materials to the S&P 500. So you can see there materials outperforming the S&P 500. So you can see what's going on at the moment. Alright, and VGS, well, that's heading down. Okay, on to commodities. So before we do, so the US dollar, the Dixie. So it's had a bounce. Wasn't going to fall over just yet. Our interest rates going up. If you were, I was putting out, you should be switching your fixed rates now. It's probably a bit late. Switch to fixed rates. Anyway, the Aussie dollar, I thought it might pull back here, but that looks pretty strong. So a breakthrough there is a bit bullish for the Aussie dollar. Gold. So nice bounce as expected. So now we've got to have the, so traditionally you have the A, B, so the A, the B up into somewhere around here, A, B, and then a C down here. That's what everyone's waiting for. But there are two other alternatives. You just get a rip. My preference would be for up here and then down here, and then find a bottom and rip. But this is you buying. I'd be, in case that one happens, I'd be buying now. Aussie dollar gold. So even the rising Aussie dollar doesn't hinder it. My girlfriend. So same story as with. She even looks better than gold. That's very nice, and it's giving you a chance. Actually, it's giving you a chance, because it might do that too, or it could. Everyone's saying it to do this. I wouldn't be waiting. You buy now. You put a stop in your home. Copper. So there's some good ETFs and silver shares. $10 a month. Come on board. Find out. Oil price, nice, just stabilising. It's very nice. Lithium, a lot of people taking their pills, so that's fine. It's run pretty hard. Uranium, so uranium's this is spot price. Most uranium miners don't sell at spot. They sell at contracted rates, with floors and ceilings. But anyway, that's just healthy. That's fine. It needs to come down, find a bottom. Coal. Oh, evil coal. Oh, shut down the coal mines. They're dirty. They're bad. And guess what? We still need them, boys and girls. So thermal coal's now breaking out. That resistance zone there. And met coal had already broken out. So again, just another commodity that's breaking out. That they all are. So you can sit in whatever you're doing or get involved. $10 a month is all you need. Might as well have a look at Bitcoin. So Bitcoin's hanging on for dear life. Interesting, the average buy price is 87 grand for Bitcoin. I've still got my target down here for Bitcoin. Alright, that's your daily wrap. If you want to get more specific recs, please join the channel. $10 a month. Otherwise, see you tomorrow.